Welcome to the Snowbird Investor Way, where we explore what it takes to create your dream cross-border lifestyle, living and investing amongst the sun, sand, and palm trees of Florida, even if you're not a U.S. citizen or permanent resident. I'm your host, Coach Roel. Welcome, Mr. Chuck Sowers, a mortgage loan originator down here in Florida extraordinaire. You and I have known each other for a few years now, and it's great that we've kept in touch. And I'm really happy to share your vast knowledge about how to help foreign nationals, particularly Canadians, get financing for their Florida income properties. How are you today, sir?
I am great. And I was just thinking of that. When I saw it, I was like, gosh, how long have we known each other? Well, COVID now is 4 years. So I bet you we've known each other like a good 9 years, I would think.
9 years, just under 10. That's what I was just thinking as
Yeah.
well.
Yeah. I was thinking kind of around that. So that's great. Yeah. And keeping in touch, that's always a good thing. That's the one thing we always need to do. But yes, so I am here to help you with whatever questions I can field for you and help all your good Canadians come down to sunny Florida and escape, negative. Well, you're Celsius, so negative 20 and negative 40s. So we can flip that around.
Yeah,
You can have
yeah.
put a little positive in front of that number.
Yeah, and it's funny because you actually, it's a bit of a tangent to start off with, but you actually left Florida for a while. And I remember meeting you in San Diego at an
Yes.
event. And then you said, I think I'm going to head back to Florida because I just really don't like the weather. I'm like, San Diego,
Yes.
without any prior knowledge, I thought San Diego had beautiful weather. But why is it that you like Florida over the West Coast?
One is, well, traffic in Florida. So if you don't want to, so we'll just stick to the weather because there's a lot of other reasons in it. But in San Diego, I found this out after the fact. But every 10 or 20 years, they have what they call the marine layer. They won't call it fog, but they call it a marine layer, and it comes in at night. And then normally it fades back out, early, 6, 8 o'clock in the morning, and then comes back, 7, 8 at night. Well, every so often, it happened to be the year I was there, the marine layer hung out until 10, 11 in the morning and came back at 2 or 3. And they say that happens every once. So it was just, it was kind of like me being in Chicago again. That's the reason I left Chicago, is because the sun was never out in the winter. And that's how I felt in California. It was just always like that foggy, damp, but yet it never rained. So everything was brown, and I missed the sun. I missed green, and
Yeah.
quite honestly, as weird as it sounds, I missed the humidity, which most people would say I'm nuts, but my hands were so dry, my skin was so dry. I had a humidifier running all the time in California, but I missed
Really?
that. My body was so used to, I guess, moisture in my skin. I just couldn't get used to it. So that was the reason. But I love Florida. I am,
Yeah.
if you're looking for someone to diss Florida, it isn't me. I love it here.
Yeah, exactly. It's funny because when people say, "Oh, yeah, it's not the heat, it's the humidity." It's like, what's wrong with the
Yeah,
humidity? I love it. It's great.
exactly.
I'd rather
Keeps my
I'd rather have
skin moist
humidity.
and yeah.
Yeah,
No,
rather than
exactly.
having to
Yeah, I
shovel
don't.
snow.
Well, I was gonna say I don't have bad hair days, but I don't have any hair to have bad hair day. You've got the good looking hair, but
That's because you're looking from front view. We have turn around, there's that little Bob's Burgers patch coming out there. Anyways,
well, see, I
that's a bit
can't
of a
see it, so you
tangent.
just look great.
Thanks. So yeah, we can totally love off of Florida as well if we want, but I want to make sure that we get in a little bit of your expertise while we have you too.
Absolutely.
So some of the things that I tell people, one very, very important thing is if a Canadian is looking to buy income property down here in Florida, that they must purchase within an entity, some kind of an entity structure,
Mm-hmm.
rather than a personal name. So let's start there, like the very basics. From
Okay.
your perspective, with your knowledge being mortgage loan originator, having been on the road with me as well, coaching, mentoring, real estate, investing students all over the country, what is your summation as to why is it better, or why is it best practice to purchase in an entity rather than your personal name?
Well, number one, legal protection, right? So If you have it in your personal name, someone trips and falls in the front yard, they can come after you. If someone's walking, they trip and fall, and it's in, you know, XYZ, Florida Corporation or entity, LLC, whatever, and it's owned by some other, they'll never be able to find who you are, and it protects you that way. And there's also tax reasons to do it. But for me, it was always the personal protection, because you're going to want to own more than one entity or more than one property. And so it gets, it can get dicey if you own multiple. This is the one thing I've learned, is that the US is the most litigious country in the world.
So it's
Florida is one of the most litigious states in the US. And
Oh,
if you
wow.
happen to go down towards Miami-Dade, and the only reason I know this is because I was asking about why are insurance policies so much money in Miami-Dade and Florida in general. I always thought it was the hurricanes. It's actually because people sue each other so much here. The insurance companies are the
Hmm.
ones that actually usually pay that. So that's why premiums are higher. And Miami-Dade is the most litigious county in the whole United States. So in essence, Miami-Dade is the most
Wow, I had no
litigious
idea.
place in the world. So, and I only know that because I was questioning insurance premiums. So that is one of the big reasons to have it in an entity, is to protect yourself.
Wow. Oh, learned something new as well.
There you go.
So I
See?
just also thanks for that. I also want to just clarify too. We're not trying to skirt our responsibilities by being anonymous, right? We're really trying to deter these frivolous lawsuits uh,
Correct.
from people who are trying to be predatory lawsuits, kind of thing, right?
Right. Right. I mean, you've seen the commercials. Most people have. Someone will go by and they'll take a bottle of water that's in their purse, pour it on the floor at the grocery store, and go, "Oh my God," slip and fall, and go, "Oh, there's water on the floor." Well, thank God there's security cameras, that showed that they did it. But that's what we're talking about, is we're not trying to say, "Oh, well, I can walk away from my property and now XYZ Corporation is on the hook for it." That's not what we're looking at. We're looking at protecting ourselves as an investors. Doesn't matter if
Yes.
you're a US investor or a Canadian. That's just how you protect yourself. And we want cash flow, but we also need to protect ourselves. And that's what a lot of people, I think, going back to our teaching days for, Rich Dad and Legacy, is most people forget that aspect of it. They're only worried about the cash flow and the monetary things. There's a lot of other things we have to take into consideration, and that's where an entity can cover us.
Yes. And in consideration of that too, there are challenges that come with having a property in an entity. It's not as straightforward as owner occupied. Can you speak to that a little
Correct.
bit?
Yeah. So when you're going into an entity and using the entity to, buy it, if you're paying cash, you don't have as many issues. But if you're trying to finance, most, especially residential real estate, most places don't want anything to do with an entity, because they need to have you personally on the loan, because that's how they're secured. So even if you're buying a residential property in an entity, almost all people are going to have you sign a personal guarantee, which means you are personally liable for the mortgage. So it doesn't, as you were talking about, you're not getting away from no responsibility, but the entity still is protecting you from frivolous lawsuits or things like that. So that's where it's at. But it's very difficult because most places will not do loans in an entity's name, period. I don't care if you're Canadian, US, whatever. They just don't want to do it because it's hard for them. What they will say is perfect their lien.
Yeah.
So that's the reason being.
So then, if most lenders don't actually like to lend to properties that are owned by an entity, how do investors do it? How are they able to get financing in an entity, whether they're
Well, you're
American or
going to go
Canadian?
through. So now we'll dive a little bit. There's QM and non QM in the US. I don't think you guys have those terms in Canada. So
Okay.
QM is your standard Fannie Mae, Freddie Mac, FHA, VA type of loan. They're not going to do an entity. You have to go to what's called non-QM, and it's kind of more, I'm not going to say the Wild West because it's still regulated, but there's a lot more openness. It's not government controlled, I should say, where the government says this is what we have to do. It allows for things, and those are the programs that will allow. But not every non-QM lender will even do that. So you have to. I actually, out of all the lenders, I only found two that'll do uh, stuff in an entity. Most will not. They
Mhm.
still are going to make you deed out and deed back in. But I'm sure there's other ones out there. It's just not the ones I typically use. My
Mhm.
number one non-QM lender won't do it. So it's just I have to go to
Oh,
other
really?
ones that I'm still comfortable with. But yeah.
So what's the difference in the underwriting process between personal name and then within an entity?
So the biggest thing is, one, you have to have all the docs for the entity, right? So um, there are, and this depends lender to lender because I did compare a couple of lenders when I got to this. One requires you to be, if it's a Florida loan, you have to have a Florida corporation or an entity. The other one will allow out of state. So if you want to use, I don't know if you teach Wyoming or any of those, but so if you want to use somewhere else, Nevada, Delaware, or wherever, you can still do it. You just need the good standing letter from that state that says, so they're okay with that. But those are a couple of the things. So they're going to look at that. I mean, that's really the biggest hurdle is just getting your docs up. You have to have articles of incorporation or it depends on the entity, what docs you would have. So, they're going to have to review those, make sure that the signers are actually allowed to sign. So
Hmm.
there's just that extra, I guess, the extra step of vetting the entity because they're
Hmm.
still going to look at you personally as well. Um, so that's just one extra step we have in there, but it's not a major step.
Right. Right. Okay. Now, in terms of we're in a kind of an interesting interest rate environment. We haven't seen hikes in interest rate for quite a while, and then in the last several quarters, we've seen very rapid rate hikes.
Yes.
I know you don't have a crystal ball, but you keep up with this news much more closely than I do. What's happening with rates? Can you shed a little bit of light to give some
Not,
context? We're recording this on March 1st of 2024 to give it some context. So leading up to
wow. So
now,
we could
and then
actually look back and see how good I did on this.
yeah, that's pretty cool. So let's test you out, Mr. Sowers.
All right.
What's the
So
interest rate environment like right now? And then what do
interest
you
rate
think
environment
is?
actually is rates have kind of ticked up here the last couple of weeks. Now that's on once again grain of salt. So we're looking at QM rates have ticked up. Non-QM rates surprisingly have come down. So like certain products, and we'll probably get into this more, but the four national DSCR, which I'll just leave it at that now because we'll get into it later. Um, if you're at, depends on your score, but you can get that all the way down where it used to be in the nines. We're now at, I just had a guy tell me 8.5 today. So that's not
Hmm.
bad. That's a 30-year fixed. So, especially when you consider a regular 30-year fixed right now is in the sevens or upper sixes as well. So the spread isn't that different. But where will rates go is the $1 million question. And I expected rates to be a lot lower by now already.
Hmm.
And I'm actually taking a step back and I'm kind of going against the grade. And I'm actually trying to use my degrees when I say this, I have my bachelor's in economics and I do have my MBA, which I know you're well educated as well. I don't
Not at
think
all.
rates are going to come down as low as what everybody thinks they are. I think we'll see FHA, VA government loans come into the fives, which we kind of already are. We may tickle the fours. I think conformings will probably come down to the sixes. maybe tickle the upper fives. I don't expect any more than that. And I think the non-QMs will probably get back to where they were before, which is the sevens and eights, which we're kind
Mm-hmm.
of getting there already. I think that's where we're going to bottom out. And I think it has more to do with everybody realized how bad it was for the economy to have 2 to 3% interest rates. I know
Mm-hmm.
you would think it would be good for the economy. In reality, it was awful because those people can't
In
afford to
what
sell their
way?
houses.
Yeah, in what way?
So yeah,
Why are
so
the low
just
interest
think
rates
about it.
bad
Like
for
if you
people?
had a house, like you bought a house, a $400,000 house, at 2%, right? And
Yeah.
now you've been in it for 3 years. You've had, maybe expanded the family or something, and you want to move. Well, your $400,000 house isn't worth 400 anymore, right? Because we've all appreciated. It's probably
Mm-hmm.
500, but the interest rates have tripled since you got
Mm-hmm.
so your mortgage payment just to get what you had is going to go up. But if you want a bigger house, that house is worth more. You now are going to leave 2% behind, go to 6.
Mm-hmm.
You can't afford that house, and that's why it was bad. So we have a very low inventory right now for homes. And I'm sure anybody that's looking for homes can see that. There's homes for sale, but not as many as there always used to be. And the reason being is people are stuck. They are interest rate boxed into their homes. And that's why
Yeah.
it's not good. We don't have that normal, 6 months inventory on, we're at, I think last I looked, we're under a 2 month inventory right now. Um,
Mm-hmm.
so that makes it tough, which increases competition because there's less houses. So homes are going for more. So it's just increasing the value even more. So it's kind of like
Mm-hmm.
that spiraling thing that as much as low interest rates helped at the time, really in the long term were super bad for the economy. And I don't think I think the Fed is keeping that in mind. And I don't think we're going to get as low as everybody thinks because it's just not good for the economy long term.
Mm-hmm. I think I I'm going to challenge that a little bit, but
Go ahead.
I still kind of agree with you. I get what you're saying. I think it was just the fact that the rapid increase in rates is what screwed people over, to put it
Well,
in a
it did for a
technical
lot of
term.
things. Like I'll give you a perfect example. Like my dad, so a little personal experience, but my dad bought a used car,
Yeah.
and he bought it when inflation was high, used car prices were skyrocketed high, and his interest rate. Now, when I say this, my dad has great credit. It's just the car he decided to buy was 13 years old with 110,000 miles on it because it was just for his Florida car. And
Mm-hmm.
but his interest rate was like 13%. And he's like, but that was, we were in the middle of that rising interest rate environment. And now he's like, I'm going to refinance it. And I'm like, you can't. That's still the going rate. And that's what's really throwing people off is in our minds, we all think car rates, even used cars, should be 6, 7%. Um, but it's making everything more expensive, which is just adding to inflation. And but on the other hand, the consumer in America has not stopped spending, and that's why
Isn't
interest
that
rates have
weird?
stayed high so long.
Yeah.
Like the Fed is when they raise interest rates, their whole hope is to curb the consumer,
Yeah.
slow the economy down so we can low. And it hasn't really happened. We just got some inflation numbers yesterday, and they did go down a little bit, but the economy still grew at 0.4% last month,
Isn't that
which is
crazy?
it's still a lot, even with these high interest
Mm-hmm.
rates. So that's where I think we're not going to get as low as in the interest rate environment as everybody thinks because our economy is just not stopping.
Yeah. I was
You
reading a
know?
few articles that it seems to be, I don't know, Google just it's serving me up the algorithm. I click on one type of article and I see like seven more
Yes.
come into my feed. But I've been seeing a few articles where young people, millennials, I don't know, whatever the younger one is, and there's like this big, I don't know, a big movement, but there's a movement against Dave Ramsey philosophy, where Dave Ramsey is telling people stop spending, the whole thing,
Yeah.
and being more like a Robert Kiyosaki, rich dad kind of side of the quadrant. Uh, we've always liked to kind of juxtapose or contrast between
Right.
what a Dave Ramsey says or a Susie Orman says versus what a Robert Kiyosaki would say. But anyways, so yeah, Dave Ramsey's, his message is save your money, cut up your credit cards, um, work extra hours to save even more money, pay down your debts, that type of thing. But then a lot of, I guess, 20-something-year-olds are pushing back and saying, forget that. I'm never going to be able to pay off my student loan debts and all this and that, and I'm going to live life now. I'm going to take my
Mm-hmm.
$6 cup of coffee every day to just have that little bit of peace and solace,
Right.
because it's like they've just given up, and
Yeah.
they're just spending for today, and debt be damned. What do you
Yeah.
think of that?
Well,
Have you seen inklings of that too?
I have not, but I know like bankruptcy is so easy. Okay. I mean, think back
In
to
the
the days
U.S.,
in the US. I don't know about Canada, but you think back to the days, we used to have debtor prison. You didn't pay your debts, you went to jail.
mm,
Nowadays, I had someone call me looking for a loan. I don't remember how long ago. And they're like, I don't know. I'm thinking about going bankrupt. I'm like, well, how much do you owe? Oh, I owe 25,000. I'm like, you're going to go bankrupt over 25 grand. I mean, it doesn't make sense, but that's what people are doing. And attorneys, once again, because we're so litigious, they take those cases on all the time, get their $1,000 and then, oh, okay, you're done. Yeah, but you got your Louis Vuitton purse and your Gucci belt and all that. Hey, fantastic. But I don't
crazy,
want to pay for it. It is there. I mean, I see that a lot. Trust me, when I see credit reports, I see that a lot because there's a lot of credit card debt, a lot of car payments. Like people are just going crazy on car. Like I'm not talking one or two giant car payments, but like I just pulled a credit report the other day. We had two payments over 1,000 and another one at 800. I mean, that's 2,800
holy
bucks a month right there
smokes,
just in car payments.
for one
That's where
household.
I see a big increases in cars,
Wow,
the payment amount.
wow.
And then once again, now, if you're only making, 60, $70,000 a year, you don't qualify for a mortgage because your car payments are too high.
Uh-huh. It reminds me of one of my students. I think you met her as well, Editha, and she commented in one of our masterminds, where she was saying that her surprise, because she's Canadian and
Mm-hmm.
she's investing in Florida, one of our star kind of like top there alumni students, and she was telling some newer students over one of the trainings that, guys, in here in Florida, people have money, people have cash flow, but they don't have good credit. So she was speaking to the fact that she had a lot of tenants applying for one of her properties, and they didn't have a good credit score, but they had a lot of cash. And so what was
Uh-huh.
surprising to us as Canadians was that we could charge like even sometimes 3, 6, or more months in advance for rent, and people had that money, but they didn't
Yeah.
have good credit.
Yeah.
What's up with that? Have you heard of that? Is that normal? Because that's not normal in Canada.
you know, it's kind of funny because, the they say the average credit score is like 720 nowadays. They say it, but I don't see it. Just like what you're saying, I see a lot of. It used to be where when someone came to me and they were in their 400s for a credit score, I would say that I would actually congratulate them because like you really have to try to make your credit that bad, right? I'm
Yeah.
like, congratulations, you did it. I mean, you purposely, but I'm seeing a lot more, especially in the 500s. And one of the reasons is when people have a credit episode, they have a tendency not to go back to credit because it scares them off. At least I
Uh-huh.
see this. This is one of the facets. There's a couple prongs, so I'll go there. But so what happens is at least on U.S. credit reports, I'm not sure what it, on a Canadian credit report because I haven't seen one in a long time. If what type of stuff's on that, but here if you have just only collections and you had a car loan and maybe it was repoed, but now you pay cash for everything. I have no way of saying, how do you pay your debts? All I can see is your past. So they could pay everything very well now, but nothing's reported on credit currently. So I can't see that. So I'm only
Ah,
judging by the
yes.
past. So that's where when
Right.
you say, oh, we got tons of cash, it's probably because they don't have loans. And that's one of the reasons the credit score is so low is people stop financing, which is not a
Right.
good thing to do. But a credit report is very much of what have you done for me lately? And if all I can see is
Mm-hmm.
what you did in the past, that's what I go by. The other thing is it gets to they, credit card utilization drives your
Mm-hmm.
credit score a ton. So if you're over that 50%, and most people are, it drives your score down. Doesn't mean you don't
Mm-hmm.
have cash. It's just you're taking that cash, and instead of paying off your credit card every month like you should, I'm like, I can pay the $100 minimum fee. I'm just going to keep spending. Now, at some
Mm-hmm.
point, that will come and bite you in the butt, but it goes to kind of what you're saying is I'm going to enjoy life now. I'll worry about that later.
Mm-hmm. That's really interesting. Yeah, it's really cool that as you're talking, it's like reminding me of because I was a licensed mortgage agent back
Yeah.
in Canada, and I took the course here, and I don't recommend it. So amazing that you are actually making a living out of it. There's just so much regulation on the MLO
Tons.
mortgage loan origination. But
Yeah.
you know
And then
what?
open
I
your own
just
company, and
remembered
then you
something as
find out you
well.
got even more.
Yeah, you helped. There was something I remember you mentioned to me. This is a bit of a tangent, but you had told me something. You helped write some legislation, or you were involved with some of this
Yeah. Well, this is a
regulation. You
long,
were
long
telling me
time
about
ago.
this.
Yes.
Yeah.
So it was regarding, God, what was that? Now that I think of it, it was Illinois that became so I helped the senator write the white pages. This was got to be, so I was still in Illinois, so it had to be at least 25 years ago. I don't really remember exactly what it was now.
That memory's starting to fade.
It is. I'm old. Because I was thinking it was lease option, but that was a different one. Um,
Was it like Sarbanes Oxley or something like that?
it was the
Or
beginning of Dodd Frank, whatever became Dodd
Dodd
Frank.
Frank? Okay.
And so I can't remember exactly what portion of that I helped with, but anyway, I had a senator that happened to know my mom, and they were proposing this, and they called me, and I helped, and it's called the white pages. So the white pages are what you formulate, and then that goes to the Senate floor, and then they make the bill. So I did that, but it's so long ago. God, you brought that up. Now I feel like an idiot. I can't remember what it was.
We're gonna have to get you back when we remember it. As soon as we stop recording, you're gonna be like, I remember
I
it.
will. I'll be like, oh, there it is, and we can add in a little blurb.
Mm-hmm. Mm-hmm. But going back to the real estate investing, in terms of the market and again, people that you're helping and what you're seeing, is a question that I often get is now a good time to buy or invest in real estate? Now I'm gonna hold my tongue for a little bit, but what's your, I don't know, if you have a stock answer for that, or you have a different answer depending on the market. Is it a good time to buy investment property in Florida? What do you
I
think?
think right now is the best time, and here's why. I think right now is
Mm.
a great time because a lot of people are afraid of the market and the interest rates. I'm going to use a Dave Ramsey phrase, which I was never a big fan of Dave Ramsey when we were working together, but he has said something, and I have actually come to, I guess, appreciate some of his things. And like he talks about when it comes to houses, it is you marry the house and you date the rate.
Mm.
So you
That
can
is a good
always
one.
refinance the rate, right? It's just that right now I feel it's a great time because we're not quite, although Florida, we're always kind of in the purchase season, but the real purchase season won't start until really April. So we're getting
Mm-hmm.
close, April, May, because then people want to close. They don't have to take their kids out of school and all that stuff. Our inventory is so low. I will tell you, I think we are going to have a more crazy purchase season now than we did 2 years ago. And I just
Why
think
is
there are going to
that?
be so many people in the market because interest rates have fallen just enough that people are like, oh, now's my chance. They're going to jump in. They're going to be looking for their primaries. And a lot of preference among sellers is given to people that are actually going to live in their house and not investors. I don't know why, but that's kind of the prejudice out there. But that's why I think now is great because there's not as many people in the market because the interest rates are still relatively up. It's keeping them out. The people haven't started flooding in that want to close over the summer. That's why I think right now is great. If you wait, which you can, you'll still make money, but home prices are just going to be higher, especially if
Hmm.
rates drop like we think they will. Um,
Yeah.
Even as insignificant, like when we just had a half a point drop, mortgage application volume went up 15%. I mean, we
Hmm.
had that. That was in January and February. Um, that and not everybody's paying using a mortgage. There's 25% of all transactions are cash. So
Yeah.
think about it. We would have had there's probably a 15 to 25% increase in activity when rates just dropped a half. So that's why, like
Hmm.
right now, when rates have kind of ticked up, I'm like, man, now is the time to buy.
Hmm. And yeah, of course,
I don't know if
we
you
always
agree,
say,
but that's my thinking.
well, yeah, you gave the correct answer, so congratulations. Just
Well,
kidding.
good. All
But yeah,
right,
I
I
agree.
passed.
I agree, and I also think in kind of a simplistic way is rates are higher, like you said, and there's a lot of pent up demand, or people were on the
Mm-hmm.
sideline, like you were saying, and they're like, "Oh yeah, here's my chance, and let's do this now because we've been wanting to buy a place since last year, 10, 12 months ago, and now we've got a little bit of breathing room. Let's do it." That I don't think the regular consumer out there is really thinking, I want to buy a house so it's going to go up in value. They're like, I just want to buy a house so I can get out of where I am now, maybe stop renting, get into a bigger
Correct.
place. So there's that pent up demand, and April, May is right around the corner as of this
It
recording,
is.
and people are going to be jumping on it,
I
right?
agree.
Now, you as your business as a mortgage loan originator, I want to give you a chance to just kind of toot your own horn in a sense. Like, how are you able to help? How are you different from like the next person?
So, well, number one is it's just me. So some people take that as a plus or a minus. But when you call me, you're going to call me. You're not getting, Roel at the other end or whoever, right? You're getting me. I'm the guy that's probably going to be doing every bit on your loan. So I know everything about you. So if you call me at 8 o'clock on Saturday, I'm going to answer the phone and I know what's going on. So we'll go with that. But I have been in business for 25 years too. And I've had a
Mm-hmm.
nice little, I guess one thing that really does set me apart is, I had that good 5.5 year run, out there with you teaching, when we were Rich Dad Poor Dad, then we switched to Legacy and all the other names we went by. And even you probably, I don't even know if you did this. I actually, maybe about a year ago, I actually went and went back to work for Tarek
Oh yeah.
a little bit. I did some sales for Tarek and actually got to talk to him and stuff in our meetings and stuff. So I have an understanding of investing is where I'm trying to go with that. Is a lot of
Yes.
people you talk to, they're going to be like, "Oh yeah, great idea," but they actually have no clue. If you were to bring up just something about the entities like we talked about, they don't know.
Yeah.
Where I've sat down. I don't know if you use Anderson or not, but whatever attorney service you
I
use,
do. I do. Yeah.
okay, so I've sat there and actually I may still have the head guy's card I think is in here. I just saw it the other day. It wasn't Clint. Clint was the guy in Wyoming. I can't remember the guy that was, but anyway, it doesn't matter.
Hmm.
Um, but yeah, so that kind of puts me apart. Plus everything that, I would say, yes, I can do conforming and all that stuff. Most of my business is that non QM. So
Mm-hmm.
that I am very up to
So
speed
non
on.
QM, non QM
Non
again is like
QM
what?
would
It's
be
the
all like
applications, the hairy
what's
stuff,
that? What?
the applications with hair on it, as they used to say.
Correct. Yeah, anything
Yeah.
out of the so figure QM is that vanilla box.
Yeah.
not everybody fits in that vanilla box. So anything outside the vanilla box is non-QM, and I kind of live out here.
Mm.
I'll do
So
these because
is that like
a monkey can do
self-employed?
those, but
Is that like
yep,
self-employed
self-employed.
or
Like, I
bank
mean, honestly, I
deposits?
do. Yeah, so I-10, um, you know, and your guys is a lot of Canadians. I mean, you might have a visa, you may not, and it's not a big deal. We'll get into that. I don't. I would assume at some point we're going to get into that, but um,
Hmm.
yeah, I do. Like, we all know that if you're self-employed, you don't want to pay the government taxes.
Yeah.
So your income's low on your tax return. So that's where we turn out, and I do a ton of bank statement loans. So we just take the income off of your bank statements, your deposits. Um,
Hmm.
so I-10 bank statement loan, for some reason, I have a lot of those. Don't know why,
Mm.
but it's just, I guess it started flowing and I go with them. So,
Mm.
yeah, I mean, but why are you going to use me? In the end of the day, it comes down to who do you want to do business with? Who do you trust? And so
Right.
you talk to me and you like me and you trust me, great. If not, that's fine too. You can use somebody else, but I'm always here to help. It is, I've helped other of your students and I haven't actually done a loan for them, but they call up, I still answer the questions and guide them through the process.
Yeah, you're really good that way. And so I want to make sure too that if someone listening or watching this resonates with what you've said, something that you've said, how can people get in touch with you? What's the best way? And
Well, you
don't put a
could, I
personal
mean,
phone number or anything, but do you have a website or a Facebook page or
I know
something?
I was going to hopefully well, here, can we do, is that going to pop up on the screen? No, it's backwards. All right, so that
No,
didn't
it's
work.
good. It's good. So the video works, but this is also
Oh,
going
the
to be
video worked. It
podcast,
was
right? So
upside
audio.
down in the screen. But so I mean, honestly, you can call my cell phone. I don't care.
Okay, go
Um,
for it.
so my cell is 815-509-6024. And I still have my Chicago cell. Can't get rid of it. It's been with me for 30 whatever years. I hate saying those words. It makes me sound so old. But that, and then my email address is way long. So it's just Chuck.Sowers. And then my company is Home Lending Specialists with an S, Inc. So it's Chuck.Sowers at homelendingspecialistinc.com. I know it's way too long,
No,
but
it's good. I'll
all
put
the,
that in the description as well to make sure.
okay. Yeah, all the abbreviations were taken. So I got stuck with the long name.
Excellent. That's good. That's all good. Well, Chuck, thank you so much for your
My
time.
pleasure.
It's always a pleasure having the stimulating conversation with you, and we're going to make sure to have you back on again at some point in the near future.
Love it. I always love talking to you, Roel. Thanks. Appreciate it.